Hello, this is Mac Ratlas, and today we're going to be discussing the role of liquidity on Bitcoin's price action. So just yesterday, the Fed has released the new schedule for their purchases. What bills are they going to purchase and how much? And there is very important data point that just came out. They have reduced their purchases from 25 billion to 10 billion. All right, so this number is almost the same. So in total, it was 40 billion last period, and now it is around 26.3 billion. This data point is very crucial for several factors. If you look at the previous bear market cycle, there had been consistent buying of 4 billion a day. And then they had deaccelerated and hit the brakes their purchases from 3.5 billion a day to 1 billion a day during the bear market phase. And when they were consistently buying 4 billion a day, when that phase has ended, well, the Bitcoin price has peaked. And then when they deaccelerated, we had seen a decline and then the bear market phase. All right. Here we have seen something very similar. There were consistent purchasing of 2.7 billion a day, and then we started deaccelerating from 2 billion a day to 1.5 billion a day. So this was 2 billion a day, and this was 1.5 billion a day. And here there were consistent buying of around 55 to 53 billion during that monthly period. Okay, so we can see a switch in regime in which there's a slowdown. You can see that the Fed actually posts that for everyone to check and study. There are different characteristics for different periods, and different periods correspond to different behavior of Bitcoin price that appear throughout my analysis. So studying liquidity, just looking at interest rates, is just a shallow, right? This is the first step to understanding liquidity in the markets. But if you want to deep diver than that, then you actually look at their purchasing. But if you want to even diver than that, then you look at their liabilities and net liquidity, which we're going to be discussed in the next video. So this is going to be a series. In this video, we're going to discuss their purchasing, their expansion of the balance sheet. But in the next video, we're going to look at liabilities and look at liquidity and how everything interacts to form the full picture of the puzzle. But nevertheless, just looking at that alone, the increase in their balance sheet has a lot of information and gives market speculators an edge than those who only look at interest rates. So this is the motivation behind this video, and I'm gonna try go in depth on analyzing this period and seeing how Bitcoin behaves, how Bitcoin price behaves in similar periods. Okay. One thing we need to keep in mind is that the absolute number of the purchases is less important than the rate of change. So if they buy 40 billion and they go down to 20 billion and 10 billion, that gives out information more than if they were buying gives out the information that decline, the stability then decline. Same here, it was 2.7 billion, then from 2 billion to 1.3, there's stability and then there's a decline. Okay, sometimes purchases can be 10,000 times smaller than QE phases, right? Especially in QT phases, but you can still see similar characteristic in Bitcoin price. So the rate of change is more important than the absolute number of the purchases. That's the first lesson you will see and you will learn. So yeah, we were buying 2.7 billion, and that was the regime that had fueled, I believe, the current rally in Bitcoin's price. But right now we're entering a new regime. We're just transitioning, and nobody's really noticing that. Nobody's talking about that. And by just a few that understand that, I think they can make more educated and better speculative decisions on the markets. Just last month, the period, we had started to slow down, but this new data point that the Fed released yesterday shows that it is not, a slowdown and then increase again, but a slowdown and a continuous slowdown. So that's the point here. There's a deacceleration, and what can we learn from history? For that, to understand that, we actually have to study the previous bear market cycle. So here we had 4 billion a day purchases, which aligned with the weakening of the bull market cycle, and I'll explain why it's a weakening. But the most important part is that there was the acceleration, and then the Fed had stopped any purchases, which led to the bear market bottom. But if we go one period before, there was actually similar purchasing, right? 4 billion a day, but there wasn't any inflationary pressures, right? So people were not worried about inflation, and it was a high liquidity and suppressed volatility regime. But in the next one, there was high liquidity despite overheating economy and high rising inflation pressure, which is why we had seen some kind of weakness in Bitcoin's price. Now, if we look at the start, right, of that liquidity cycle during the previous bull market, right, they were purchasing around 1 billion a day. Everything was fine. There was no corona or economical pressures, so they were just injecting liquidity for the sake of increasing liquidity in the market. But then they started to see some kind of weakness in the market, right? And they framed it as it was a reserve management expansion. They purchased around 40 billion during that whole period, and it was around 4 billion a day again. But they framed it as it is not QE, and they're not really expanding their balance sheet when it actually was. And that's why people refer to that period as stealth QE. So it was QE, quantitative easing, but the Fed said it was not, and that's still expanding their balance sheet. This is something very similar to what we're seeing now. Okay, so during that phase right here, the Fed expanded the balance sheet with around 2.7 billion a day, and they called it supporting the credit market, right? During that phase, we did have a lot of private credit problems and worries about a new financial crisis and etc. And this is why the Fed has injected some kind of liquidity after the quantitative tightening phase of the market has ended. So after their stealth QE phase, which is here, Corona just hit. Okay, Corona just hit, and they had to save the market. The market just collapsed, and they had to do something about it. So they started purchasing 1.2 trillion in treasury purchases, which accounted for around 40 billion to 70 billion a day during that period. 40 billion to 75 billion a day. That is a crazy number. And just to put it into account, just into perspective to see how much that number is, during this cycle, the Fed had only injected during that period right here around 7.5 million a day. So that's 10,000 times smaller than the emergency QE they did before. 10,000 times smaller. And we still had a bull run. Okay, because it was continuous injection. So it was about the messaging, right? If you do research about this, then you understand the absolute number is not as important for markets as it is still important, but not as important as the rate of change of the or the acceleration and deceleration of the purchases. So the rate of change of purchases, is it constant? Is it increasing? Is it decreasing? That's what matters for markets the most, especially for risk assets just as Bitcoin, because it is very, very, very liquidity sensitive. So it moves in tandem with liquidity. And if we understand liquidity, then I think that unlocks the keys to the secret door of the Bitcoin verse, right? At least one of the keys. So here we had a 40 billion, 75 billion a day after Corona hit, and there was economies are closing down, and they needed to stimulate the economy somehow, so it continues to grow. But then they had noticed that they injected a lot, and they started to deaccelerate. They started to buy from 30 billion to 4 billion a day during that phase. Now that the acceleration phase corresponded to the start of the bull market, right? While that deceleration phase has corresponded with the end of the bull market or end of the business cycle. So context here also matters, I think. Here it is during the late cycle, bear market phase, slowing economy phase. So I think this one mostly relates to that period right here rather than that period right here. But we never know. So I think the next phase that comes out, from here is pretty crucial. Are they going to accelerate again the purchases, or are they going to stop? Because if they stop, it really mirrors the previous bear market. But if they continue, then maybe it mirrors an extended bull market, or just skipping the bear market altogether. So I think understanding liquidity will really help us understand what type of regime are we in. Is it a bull market? Is it a bear market? Is it in between, right? So after the slowdown, the Fed has consistently bought around 4 billion a day. So it was high liquidity, suppressed volatility regime type of zone. That's why we had the extreme upside in the bull market. But here, despite it being the similar amount, we started to see rising inflation pressure, and everyone being worried about an overheating economy. And I believe this is why the liquidity injection wasn't enough to make Bitcoin make new highs, as there were pressures and worries that the economy is slowing down, and these pressures were not enough. But the Fed has already expanded its balance sheet by a lot, so they cannot really expand it more. They can only slow it down, right? So they slowed it down, and the bear market happened. Now, here we can understand and see that here there was consistent buying pressure and a slowdown at the end, okay? A consistent buying pressure also corresponds to that phase, even though it is 10,000 times smaller in some cases and 4,000 times smaller in other cases. There was still consistent buying pressure of 7.5 billion a day. And notice that what the Fed said about here, right? The Fed said this is usually, which is true, the Fed needs to always keep the wheel greased, right? They cannot really stop injecting money into the economy. They can reduce liquidity by buying more, by increasing their liabilities, and then the net liquidity go down, even though they're expanding their balance sheet, right? They can increase the liabilities more, and the liquidity goes down. So if liability is up and balance sheet up, it balances out. But if, let's say liabilities is constant and balance sheet is up, that's when liquidity increases. And when, balance sheet is constant and liabilities is up, that's when liquidity goes down. All right. So here, they were constantly buying 7.5 million, even though it was for operational things to make sure that the economy is working well and that their purchases are, going into the economy at the right time and in the right places. This is like for testing measures, but at the same time, it also gives a signaling to the market, right? So here they did the same thing. They were still keeping the wheel greased, but nevertheless, the signaling was different and the price action was different. Here, we had seen a huge strength in Bitcoin's price, especially at the end. But here, despite the amount being the same, 7.5 million a day, the rate of purchases has deaccelerated. It was spaced out. And that's why we have seen more weakness into the bull market, right? We couldn't really go much higher than the previous high. And that corresponded to the slowing down of liquidity injection, or signaling by the Fed that, yeah, we got overheated. We need to quantitative tightening a little bit more, similarly to what happened during that phase. And then the slowdown happens, right? Here what we've seen is something a little bit different. So despite them reducing liquidity due to their quantitative tightening measures, there was private credit problems. There was worrying about the economy going into recession, the unemployment rate rising fears, and etc., etc. Even though that we had high inflation fears, right? But the Fed couldn't let the private credit trickle down to the banking sector, and then we'd have a 2008 type collapse. So they had to weigh out their options, and they decided to inject liquidity to support the credit markets and the banking industry with some cash, right? So they injected around 2.7 billion, which is an increase from the previous time, and this why it leaves you to question: is this bear market going to be similar to the last bear market? So there's a possibility that we actually have a suppressed bear market, or maybe the bottom has already been in. I'm really not sure, right? Because in terms of Bitcoin cycle uh, analysis, then we should not have the low in yet, but around in October, right, or September. But increasing liquidity injection, even though the Fed doesn't want really risk assets to go up, they just want to support the economy, to support the banking industry, and make sure nothing really breaks down. It has an indirect effect on risk asset and also just the stock market in general to go higher, which you can see the new rally has corresponded with the new liquidity injection, right? The increase in the rate of change has increased. So it would be naive to just assume that this bear market is going to be similar to previous bear markets. It might be the same, right? It could be, and that's my base case. But after studying liquidity, I'm being much more cautious on the impact of liquidity on Bitcoin's price. But what we can see, right, recently, is that the liquidity has deaccelerated, and if it stops after some time, after that period, then the theory that the bear market is intact gets more conviction. But if we see stability or increase in terms of the purchases, then indirectly the Fed is going to push risk assets higher, which is not a normal cycle, which puts you back to the dot-com era type cycle, an extended cycle, which usually ends abruptly and severely for a long time, and you would not see new highs for multiple decades, right? Or a decade, something like that. I believe that letting things run their course is the best outcome. Economies should experience slowdowns and expansion phases. You cannot just stimulate expansion through printing money all the time, right? It's just not a healthy thing. I mean, can you imagine a country being a person, and can somebody just keep growing by borrowing money and putting it into their businesses without their businesses making enough money to cover their debt or something like that? It's just not a healthy thing. At some point, that person is gonna not be able to borrow any more money, or something is gonna collapse, or he's gonna probably go to jail, right? It's not healthy, right? I believe that the Fed really wants this cycle to be healthy, and really is trying to slow down the rate of purchases, but they cannot let the banking sector break. So there's going to be indirect consequences that we're going to experience, that we have to know, to understand, and to make good speculative decisions on markets. So this is my view on the market. They have been purchasing at the start, just to summarize. Then there was stability and deacceleration, which led to the bear market phase of the cycle. Here there was something similar, purchases, even though it's 10,000 less than the 75 billion here, just that phase, by the way, or 4,000 less than the 4 billion or something. And then there was deacceleration, which should have led to a stop in the purchases. But something broke down, something changed, or almost broke down, and the Fed had to jump in and save, and say it was for tactical reasons only, for keeping the credit markets healthy, which is true, but what they do not say is that it has an indirect effect on risk assets, the stock market and other assets to go higher during such accelerating rate of change periods. But right now, we're seeing a slowdown. Let's see if the next schedule, what they're gonna post, and is it gonna be even more slowing down, which should kind of signal to the markets that things got overheated and we have to slow down, which might lead us to the next leg down. But if things accelerate or stay stable, then I think that has more of a bullish pressure on risk asset prices, such as Bitcoin. So this video has focused on balance sheet expansion, but this is not the full picture. We should also look at their liabilities and what they're doing there. What's happening to the net liquidity? Is it increasing or decreasing? Where is that liquidity going? What treasury bills are they buying? For example, what they buy is also very important for its effect on markets. Sometimes it's short term, 1 to 4 months, sometimes 4 to 12, and sometimes one in years, right? This is going to be a series, so if you're interested in understanding the role of liquidity on Bitcoin's price and increase your edge in the market, then do please subscribe so you don't miss the next series of this video. And if you enjoyed it or learned something, do hit a like. It helps tremendously this channel to grow and for this data, for more people to see it, and so that I can always record and post online for free. Let me know if you liked it and what's your thoughts about this video. Leave a comment below. Thank you, and I'll see you in the next video.